What if I told you that you could buy a rental property even if you don't have a job? Yeah, no job, no W-2, no pay stubs. That sounds crazy, right? But it's not. People do it every single day, including a lot of my students, using two simple tools that most people have never even heard of: DSCR loans and private money. I'm not here to sell you some type of dream or hype you up. I'm an actual licensed realtor. I'm a real estate Section 8 investor. I coach people one-on-one throughout this exact process. So this isn't just a theory. This is what actually works in 2025. So if you've got decent credit, but no job, keep watching. Because by the end of this video, you're going to know exactly how you can buy a rental that cash flows with or without traditional income. Let's start with the obvious question. Don't you need a job to get a mortgage? Nope. Not always. So there are lenders out there who care way more about the property itself than your job history. They're called asset-based lenders, and the loan product they offer is called a DSCR loan, which is debt service coverage ratio loan. It's a mouthful, but basically instead of asking for your pay stubs for tax returns, they look at one thing. Does the rental property bring in enough rent to cover the mortgage plus taxes? If the answer is yes, and you've got a credit score of 680 or higher, you're in the game. That's really all they check. You might not hear this from your average realtor or mortgage broker because they don't work with investors, but I do. I've helped dozens of people get into real estate, and including people who were unemployed, self-employed, or just didn't want to deal with any type of bank. So let's break this down a little further. A DSCR loan is designed for real estate investors. So no tax returns, no job history, just credit, down payment, and cash flow. You'll still need a 680 plus credit score, 20% down, and a property that brings in enough rent to cover the monthly mortgage payment. And here is something that most people don't know. Most DSCR lenders require the loan to be at least $100,000 in size. Now, some will go down to, let's say, $50,000 or zero, but those are rare. I personally got lender relationships that offer a $0 minimum, but most people won't find that on Google. I've had to hunt through hundreds of lenders for this. And that's something that only my mentorship students get direct access to. Also, this loan is in your LLC's name, not your personal name, which makes things easier to scale. You can get 10 of these without hitting personal credit limits or worrying about debt to income ratios. All right, so how do DSCR lenders actually decide if you're approved? Here's what they ask for. Credit report must be 680 or higher. They're also going to ask for LLC documentation, such as your articles of organization, operating agreements, and EIN. Now, how do you get these in the first place? Well, I actually have several YouTube videos about how to get these documents, how to make an LLC without going through some third party that's going to overcharge you. So if you are interested in that, go ahead, check out the videos, but it's very simple. You just go on the government website and essentially fill in the info correctly and then pay like $100. Now for operating agreements, there's many templates out there. I also offer a template to my mentorship students. And for the EIN, you just go on the SS4 online IRS tool that they have. You'll also need a rent estimate. So usually from the lease itself or using some type of tool like Rentometer, and the lender will use their own. So you don't necessarily have to give them, hey, it'll rent for this much. No, they're going to figure that out on their own. But what you do have to at least know on your own is what it most likely will rent for so that you and the lender have similar answers. You're also going to have to go through some property details, such as going through an appraisal to make sure that the home is actually worth what you're paying. So for example, let's say that the home has a purchase price of $150,000, but an appraiser goes out, and if the appraiser says, hey, this is only worth 130 maximum, well, then you have, kind of a problem. Because where does the $20,000 difference come from? The bank is only going to approve you up to 130. So this 20K has to be either pulled from the buyer, pulled from the seller, or the deal just kind of goes bust. You're also going to need a purchase contract, which you should have at this point, especially if you're using a realtor. And if you need realtors, I have a mentorship program. Of course, the address, which is going to be in the purchase contract, and a rehab estimate if it's needed. And oftentimes this rehab cost can actually be lumped into the loan itself. You'll also need bank statements to prove that you have the down payment. I feel like that one should be obvious, but just in case anyone isn't aware of that, you only need 1 month of bank statements though. And then the DSCR ratio, and that is the big one. They don't ask for your job. They don't need your tax returns. They're not going to be calculating your debt to income ratio like traditional rentals and traditional loans. What they care about is the DSCR ratio, the debt service coverage ratio. It's super simple. Take the property's gross monthly rent, so let's say $1,500, and divide it by the monthly payment on the loan, let's say $1,000. That's a DSCR of 1.5. That means the rent more than covers the mortgage, and that is a green light. Now, most lenders want a DSCR ratio of at least 1.0, but they really look for 1.2. And the reason they want that higher 1.2 sometimes is because they want to make sure that you are remaining profitable. So for example, if you are planning to go into the Section 8 program, like what I do with all my rentals, the DSCR lenders are still only going to look at the fair market value because it typically is lower, first off. And the second part of it is that according to fair housing guidelines, they can't just choose Section 8 or fair market. They're going to pick, you legally have to advertise to both parties, meaning they're just going to pick the number that is lower of the two to be conservative. But if the property cash flows and your credit is solid, you will get approved, job or no job. And that's the beauty of DSCR. And for all of those interested in my lenders that have $0 loan minimums, as well as my just network of realtors and contractors, go ahead and click the first link in the description because I offer a one-on-one mentorship. Yes, it's completely one-on-one. It's not some type of PowerPoint and I ghost you. I personally think there's 2 key values in this, which is A, we help you sidestep a lot of mistakes. So for example, I recently just helped a student avoid overpaying by $7,000 on roofing costs. And instead we found a preferred contractor of mine that could do it for $7K less. So it's helping you sidestep a lot of beginner mistakes that'll save you a lot of money in the long run. And the second part is that we typically go through the process just a lot faster. I've seen a lot of people go through Section 8 on their own and they have a vacant property for 4 months, or they're putting in a dozen different offers on homes and none are getting accepted. So on average, we're going through A to Z from making the LLC all the way to getting it rented pretty much within 8 weeks. So if you are interested in this, go ahead, click the first link in the description and book a free call with my team. And if you're interested in a free community related to Section 8, click the second link in the description. I actually have a completely free community with over 400 people in it now, where you can network with different investors and join my twice a week completely free webinars. And that is the second link below. All right, back to the video. Moving on to private money and the BRRRR strategy. Now, let's say you don't have 20% down. That's a lot of money, right? 20K sometimes. Maybe you've got good credit, but just no savings. That is where private money comes in. So private lenders are regular people, not banks, who lend based on the deal itself, not your job and not your income. So if you found a killer deal, they'll often fund 100% of the purchase and rehab, especially if you're using the BRRRR strategy, which is buy, rehab, rent, refinance, and repeat. Here is how it works. You'll find an underpriced property. For example, a home that after it's in perfect condition could be worth 200K, but it's listed distressed for 100K. The second part is a private lender funds the entire purchase. So purchase plus the rehab that's going to be estimated. You fix it up, get it in perfect condition, place a Section 8 tenant inside of it, and then refinance it into a DSCR loan. Now at the new higher 200K value. You pay back the private lender, the 100K that you pulled, plus let's say, I don't know, 30K in rehab. You keep the property itself and pull out equity to do it again, because you can typically pull out 80% loan to value ratio. This is how I originally scaled my portfolio, and it's how a lot of my students do it as well. But again, you still need good credit, right? You need at least a 680 credit score, and most private lenders won't even touch a deal unless the loan amount is at least $100,000. So just like DSCR loans, credit matters a lot here, and the deal matters. Your job doesn't really matter. So how do you know which strategy to use? If you've got money saved but no job, go with DSCR. You'll get lower rates first off. We're looking at about 7.5%, more reliable lenders, and it's great for long-term rentals. If you've got literally no savings but good credit and you're willing to essentially take on a part-time job, go with private money and the BRRRR strategy. Find a deal, fix it up, refinance out of it, and repeat. But here is the truth. Private money is faster and more flexible, but it's also more expensive because of the higher interest and shorter terms. So it's great for flipping or BRRRR, but not the best for a long-term holding by itself. I mean, some of the interest rates are 13 to 15%. DSCR is slower, but cheaper and designed for buy and hold landlords. Inside my mentorship, I help people compare both side by side, connect them with the right lenders, and run the numbers on the deal itself. So there's no fluff, just the math itself. And another point is simply risk tolerance. I mean, a BRRRR can go wrong in a few different ways, whereas DSCR, if you're buying a turnkey property, there's only so much that can go wrong. All right, now you know exactly how to buy a rental without a job. Let's recap. You don't need a W-2. You need good credit and a real strategy. DSCR loans are perfect if you've got 20% down and a rental that you know will cash flow. Private money lets you do the BRRRR strategy with up to 100% financing, but only on the right deal. And in both cases, your credit needs to be 680 or better, preferably, 720 or higher. And if you're working with me, I'll give you the lender connections that you need and help you decide which strategy actually works for you, not just what you see on some guru's TikTok account. So if you want help running your numbers, picking the right market, or getting access to my lenders, go ahead and apply for my mentorship using the first link in the description. Again, we help you avoid a lot of those beginner mistakes that could cost you $10,000, $15,000. And we also get you through the process a lot faster than you doing it solo. And again, it is completely one-on-one with me directly. You're not going to be dealing with anyone else. You can also click the second link in the description to join my completely free community. I've actually seen some people try to sell Section 8 properties through the community to other members, which I thought was super cool. So click the second link in the description to join that, and you'll be able to get access to my twice a week, Monday, Friday, completely free Q&A webinars. As always, I'm Joseph Khateri, realtor in the state of Virginia, and have a nice day.